Alright, I want to make this video to show you an aggressive version for gap fill combo. It's also for gap fill 1. If you bought the book, you'll know what I'm talking about. But if you look at the long-term trend, the number that includes 100 is basically a look-back period. So I have these extra versions that I've tested in here. I don't need these. But if you're looking at this one right here, we have a default here of 100. This is hard-coded in the easy language. I've made it an input. I've also got this exit minutes till close. It's not included in the code, and that basically gets out 1 minute before the close. But you could change that to 1, 2, 3, 4, 5, whatever you want. It's 1 minute charts, so you can modify your exit there. You get your stop loss, profit target, and contracts. And this is part of the low frequency portfolio. So you can subscribe to the low frequency portfolio if you're a subscriber already. Below is a download link. You can go ahead and download this if you want, and use this version instead. And you can experiment with this L1 number, which is what we have. Let's look at the last 2 years of gap fill combo. This is inclusive of slippage and commission. So you can see recent trading. This is from yesterday. Today we didn't have any trades. But yesterday we had a long trade with a loser, one of our first losers in a while. Gap fill combo includes gap fill 1 and gap fill 2. The last 2 years of this are, you can see 192 trades, $56 average profit per trade. This is inclusive of slippage and commission. And so really good results. If you don't include slippage and commission, you're over 80 bucks a trade, which is really good for a day trade strategy. Almost 70% profitable, 1.5 profit margin, and most of it's on the long side. And so we have a long-term trend filter in here, and let's look at the equity curve. Really good equity curve. You had some dips here of about $2,000, another $2,000 dip there, but lately it's just kind of accelerated and made new highs, and so it's doing really well. The book was released in July, so since the book was released around this time, July the 1, the research ended. It took a little dip and it's been up ever since, so about $6,000 in profit in gap fill combos. So it's a good investment, good return on your investment to have bought this book and to have traded it since that time. So want to look at the aggressive modification, and that is a shorter term trend filter. So if you take this and you change this to 1 instead of 100, and you'll know what I'm talking about if you bought the book. If you haven't bought the book, you can buy it below. There's links below for the book as well. And what this does is it makes it more aggressive. It trades more, both on the long and short side. And so the reason I wanted to do this or test this is because you've got this slow downtrend with these gap ups that keep getting filled. And I've noticed this. I changed this probably a couple of 3 weeks ago, and I've noticed, we've had four short trades in a row. If you look at this, you can see we had a long trade on 4.5, and you go forward to 4.6. You had a short trade that did well, got out at the end of the day. On 4.8 you had a short trade, on 4.11 you had a short trade, and today we had a short trade. So it's more aggressive on the short side lately because you don't have the long-term trend filter in. We've mainly been trading the long trades, and so let's look at the TradeStation performance summary. It's not as good, but you could potentially trade both versions of this if you wanted to be more aggressive. If you wanted to use this for the short side, or if you wanted to modify it or check even a 20 period look back or a 50 period look back, you could do that as well. And so just trying to create options for you to do research. This is 2 years, but we have a look back of I believe it's 100 bars is what we set the max bars back to. So if you look at the performance graphs, look at the periodical returns, look at the monthly. It says 2 years, but when you look back that far, you miss about 5 months. So our feathers, it really starts on September 2009, so it's more like a year and a half worth of data, because it's looking back at 100 daily bars by default. And so these results, not as good as a regular gap fill combo, but it's always an option, something to work with, something to think about. And I wanted to show you that. You can click on the links below to get any of the books, so you can subscribe to the low frequency portfolio and get this. And let me know if you have any questions. I also just put this video on pause and went and quickly checked what does this look like in gap fill 1 if you take out the long-term trend filter and just use the other rules as part of the strategy. Really good results. We didn't get a trade today because that was the gap was above the previous day's high, but you've got some really strong equity curve trends. This is inclusive of slippage and commission, so you'll see this here. Gap fill 1 results for since September. Actually goes to September of 2009. Let's see, monthly, or April of 2009. It goes back to April of 2009. We actually get our first trade because we're not looking at the long-term trend. And so you get these performance graphs. Let's look at the periodical returns. Since October, it's been really good, inclusive of $25 slippage and commission. So it's around 61 bucks. 200 without slippage and commission, 291 trades, 75% profitable. So you can modify gap fill 1 to take out the long-term trend filter if you want to be more aggressive. You can also take it out of gap fill combo and see how it would do. And that is what I wanted to show you mainly in this video. So download it if you've already a subscriber. If not, you want to subscribe, sign up for the low frequency portfolio, or get the book, and you'll know exactly what I'm talking about.